is the only person in the world who has created a rating system to select the best cryptos to buy, and has also created an advanced algorithm to time those investments. The result is our crypto ratings model, which tells you what to buy or avoid, and our crypto timing model, which tells you when to buy or sell. Both are equally critical. Both are a must to grab this new opportunity. Thanks to his crypto ratings model, Juan has consistently selected only the best of the best cryptos. Thanks to his crypto timing algorithm, he's caught nearly every major top and bottom in the crypto market. And thanks to the combination of both good selection and good timing, Juan has achieved a remarkable track record. Just in his monthly letter, the average gain on all his crypto trades is 341%. That's an average gain of 4.4 times your money per trade on 37 trades, all without reinvesting gains, all without leverage, all based on his trade alerts issued to real investors in real time. Juan, that's one heck of a track record. 37 crypto trades, an average gains of 4.4 to 1, all in real time. In all my 5 decades running this company, I've never before seen better performance. Congratulations, Juan.
Thank you, Martin.
How do you think that track record compares with what's possible in the current environment?
Well, Martin, it's hard to compare.
Why is that?
Because my track record is over a period of time that includes 2 bear markets, and now we're in a massive bull market.
You helped investors make an average of 4.4 times their money, even including 2 periods when nearly everyone else was losing money?
Correct, because I had precise tools for determining what to buy, when to buy, and perhaps most important of all, when to sell. See, that's the key to making money in the crypto wonder SUPERBOOM. So before anyone starts salivating over the amazing profit potential in this market, let me offer a few words of warning. There are more than 13,000 cryptocurrencies in the world today, and the overwhelming majority are garbage. What's worse, crypto markets are volatile in the extreme. So I cannot stress enough how important it is to avoid the big pitfalls that many investors fall into.
Tell us what they are and don't pull any punches.
First, never underestimate how high your crypto can go. I always hear people saying, oh my gosh, my crypto has gone so high already, it couldn't possibly go any higher. I'm cashing out. The fact is, there's no way of knowing how high it'll go. But there is one thing we can measure quite accurately. It's how long each cycle lasts.
So how do you gauge when it's time to sell?
I simply count time. I wait until it's time. Then the market gives me the signal when it breaks down below key barriers.
So you don't catch the exact top?
Martin, I don't want to guess the exact top. If I do that, it's very possible I'll miss out on a much bigger rise to a far higher top. In the market's final climactic surge, it can double or triple in a single month. The second big mistake many people make is that they never sell.
But with Bitcoin, even if they just hold through the worst bear market, eventually they'll recover all their losses, plus more, right?
Yes, that is true. But that leads me to the third mistake most people make. After the market falls sharply, they panic. They don't just hold. They wind up selling at the worst possible time. You said it before. To make the most out of the crypto wonder SUPERBOOM, you need good selection and good timing.
Show us how you do the crypto selections, and then show us how you time the market. Walk us through the steps.
All right.
Our WISE Ratings homepage gives you page after page of cryptos rated A+ to E-. It includes the WISE crypto rating on each coin, its name, its symbol, major components of our ratings, plus much more.
Our ratings are key, so let me jump in to explain. These are the world's first and only cryptocurrency ratings by a financial rating agency, WISE Ratings. And as with all our ratings in all sectors, we never accept compensation of any kind from the entities we rate. That's why Forbes magazine called me Mr. Independence. That's why Esquire said we're the only ones that have no conflict of interest. And that's why the U.S. Government Accountability Office, the New York Times, and the Wall Street Journal recognize the great outperformance of our ratings compared to all our competitors. Our independence means unbiased analysis. Unbiased analysis leads to better accuracy. And accuracy is why investors from all walks of life trust what we do.
Yeah, to get a list of cryptos to avoid today, press on this small menu button at the top of this column and select Sort Descending. You'll get this list that starts from the lowest rated coins and then down the line to coins that are not rated quite as low. This is where you can start building a list of cryptos to consider for purchase. How? Well, the best place to start is right here. Instead of displaying all rated coins from A to E, we're going to select only buy rated coins, in other words, A's and B's. We click on this filter tool and select crypto rating. We click on A plus as the top of the range with B minus as the bottom of the range. And presto, our list now includes only buy rated coins. I'll just press this menu button again and sort in ascending order, with the highest rated cryptos at the top of the list. Here are the top ones right now: Bitcoin, Avalanche, 0x, Celestia, Chainlink, Pendle, and Solana. Plus, since you're here with me right now, as an extra benefit for attending, let me give you a sneak peek into our cutting-edge AI technology, which is currently in the final stages of development. An important component of our new AI is momentum, how much an asset has risen over various periods of time. You can get a glimpse into that by checking out each crypto's performance over the last 30 days, 90 days, or 1 year. Start with the 30-day price range, each crypto's gain or loss over the last month. Then click on these three little lines and select Sort Ascending.
Wow, look at those gains. Chronos up 66.21%. Thorchain up 77.82%. Solana up 88.98%. Dogecoin up 118.65%. IQ up 120.47%. All the way to Phantom up 160.4%. Fetch AI up 179.74%. And 0x 208.44%.
Yep, all in just the last 30 days. All with B's or A's, which mean buy. All easy for average investors to use at any time, 24/7.
So currently these are the outstanding market leaders?
Right. Bitcoin is also doing great, but it's near the bottom of this list. This confirms what we said earlier, that the crypto wonder superboom is now getting underway. Move on to the 1-year price range, and again we select Sort Descending. Thorchain up 588.56%. Fetch AI up 696.41%. Render token up 820.70%. Solana up 839.22%. And Injective up 892.45%.
Despite all this, investors still ask, why not just buy Bitcoin?
Well, Martin, I think the answer is glaringly obvious. First, because Bitcoin lags far, far behind the best performers. Second, because Bitcoin alone does not give you diversification. Nearly all the coins at the top of our charts are different, and many were created for very different functions. As you know, Bitcoin was originally designed to be a kind of new money, a new kind of currency, but that's not its primary function today. As it turned out, Bitcoin has become mostly a store of value and a refuge for investors who fear the consequences of central bank money printing, global inflation, not to mention global chaos. In other words, Bitcoin has emerged as a kind of digital gold, Gold 2.0. That's Bitcoin's primary use case today.
What about the other cryptocurrencies? What's their primary function?
This is what often confuses many people, because most cryptocurrencies are not really intended to be currencies at all. There are other kinds of digital assets. And often the only thing they have in common with Bitcoin is that they're based on the same technology that the creator of Bitcoin introduced, the blockchain. So don't view all of these new cryptos as currencies. Instead, look at them as new technologies. A new, more advanced and secure kind of internet. A new, more advanced kind of banking system. A new, more advanced kind of stock exchange. Take Ethereum, for example. It's often described as a paramount world computer, where everyone has access to the same open, public database. It is the first and largest blockchain that supports a wide variety of internet applications using what's called smart contracts. In the last 2 bull markets, at this point in the cycle, Ethereum was up 136% on average. And from this point to the top of the market, it rose 15,005%, or 24 times more. Chainlink is also entirely different. It helps connect the real-world data from the financial markets to the blockchain. This supports a whole new, more efficient, more secure peer-to-peer financial system called decentralized finance, or DeFi, which has already grown 100-fold in just the last few years. Monero is another thing entirely. It's the leading coin in a brand new world of financial privacy, giving its users and investors a whole new level of protection from snooping eyes. In the last bull market, Monero was a new crypto wonder. At this point in the cycle, it was up only 26%. Then, from that point forward, it rose another 35,109%. I think you could see a similar pattern with new crypto wonders this time around.
When you and I spoke just the other day, you rattled off the forces driving this market higher. Could you please share those insights with our viewers now?
Sure. There are four. They're converging right now, and each one is extremely powerful. First, the spot Bitcoin ETFs. The SEC has approved 11 spot Bitcoin ETFs, and already they've broken all records, raising a total of $33 billion so far. This powers a massive demand for Bitcoin. Second, even while this massive investor demand is surging, the Bitcoin halving is set to hit this month, an event which will slash the supply of new Bitcoin by 50%.
Explain why we're sure that's going to happen.
Well, it's built into the Bitcoin code. It's immutable. There's no power on earth that can stop it.
So you have investor demand surging and you have available supply plunging at the same time?
Yep, an earth-shattering collision that can only have one outcome, in my view.
Which is?
One of the biggest Bitcoin bull markets of all time. Not just in Bitcoin. Sure, capital will initially flow into Bitcoin through the new ETFs, but from there it will fan out to other cryptos that have a proven track record of far better returns than Bitcoin. Now let's talk about the powerful upward pressure on crypto prices driven by technology, which takes me to the third powerful force, decentralized finance, or DeFi, which, as we said, has already grown by more than 100 times over.
DeFi is basically banking and finance on the blockchain, right?
No, Martin, it's much more than that. DeFi is not just replacing ordinary banking and finance. It's also creating a whole new world. It's giving individuals like you and I access to hundreds of trading facilities that, up until now, were available only to the pros in the trading rooms of major brokers and banks. And actually, it's even more than that. DeFi also gives everyone access to investments and trading that are not even available to brokers and bankers.
Will DeFi take over the financial world?
Someday, perhaps, but let's take this one step at a time. Our research tells us that it has the potential to replace or compete with at least 10% of the global financial system.
And the global financial system is huge. It has $500 trillion in assets.
Correct. And if our projections are on target, DeFi could grow to 10% of that, or $50 trillion. That's about 500 times bigger than it is today. So right now, we're looking at several cryptos that are designed from the ground up to help investors profit directly from that growth.
Wow. Talk about convergence of forces. You've got the demand from 11 giant ETFs buying spot Bitcoin for the first time in history. That's force number one. You've got the big cut in new Bitcoin supplies with the halving. Force number two. You've got decentralized finance, which could grow from $100 billion to $50 trillion, or 500 times. Force number three. And force number four is?
The biggest of all, artificial intelligence.
AI.
AI. The processing power and data storage already needed for AI boggles the imagination. And AI is still in its diapers, just beginning to grow, just starting to get rolled out to major industries like oil and gas, transportation, autos, mining, aerospace, practically everything under the sun.
And beyond the sun.
Right. There's no way chip makers can keep up.
But crypto developers are going to implement the solution.
No, Martin, they already have implemented a solution. One crypto provides a way to use a secure and robust blockchain to share computing power from any laptop, PC, or supercomputer connected to the internet. And there are at least 2 billion of those in the world today. Another crypto uses the secure and robust blockchain to share storage power from any device connected to the internet, including not only computers, but also mobile phones and tablets. There, the number of devices is at least 22 billion. So the crypto world is a perfect fit for the AI world. And we think the two coins we're following will be among the ones that benefit the most.
Tell me more about them in a moment. But right now, I'd like you to give us some tips about the timing. And wow, you're certainly the right person to do it. Let me run through the precise timeline so our members can get a full picture of that, okay? Late 2017, Bitcoin at a new all-time high, near $20,000. Euphoria overwhelming the market. Investors diving into crypto with wild abandon. But you give nearly all cryptos ratings of just C's, D's, and E's. Not a single one gets an A. Bitcoin lovers, meanwhile, are convinced that the parabolic surge in crypto prices will never end. So they're angry at you, Juan. They're angry at us. They're so angry at the bad ratings we gave them, they mount a massive cyber attack on our website. But guess what? They're wrong. And you're right. Bitcoin crashes, and so does the entire crypto market for almost a full year. December 12, 2018. Now the psychology has reversed. The market has been falling practically nonstop, and it seems everyone hates Bitcoin. Not just the usual skeptics, but also former Bitcoin lovers. No one wants to buy. But you don't pay any attention to that one. You announce to the world that it's time to buy Bitcoin again. The news goes viral, and sure enough, 3 days later, Bitcoin touches rock bottom and a new great bull market begins. Investors who buy on that day, that same day you call it, and they follow your ratings, have the opportunity to make 20 times their money in Bitcoin, 54 times their money in Ethereum, 102 times their money in Cardano, and a whopping 234 times their money in Chainlink. Fast forward to November 2021. Again, investors are euphoric. Again, they stampede into crypto with wild abandon. But you get major sell signals. You issue a series of sell alerts in rapid succession, and your members are able to cash out. 1 year later, November 2022, again, another big bad bear market has hit crypto. Again, investors want no part of it. But you and I hold a conference, just like this one, with one overarching goal. So you can officially declare a new big bottom and the beginning of this great new bull market.